The national home prices have hit an all-time high, surpassing what we saw in May of 2021, and we've also gone up for 17 consecutive months. This is while most people are scared on the sidelines thinking the property market's about to crash, and there's commentators out there also suggesting that, hey, the market should have crashed by now and it's about to crash today. If not today, then it'll be tomorrow. And if it's not then probably next week. I'm not sure. But the trend is your friend until the end, and at that point, it's going to be too late to try and build a position. So that's why you need to start preparing right now. If you're interested in what my thoughts are, definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, what I'm about to tell you is around the grounds what's happening. And why you should probably listen is because I look at hundreds and hundreds of properties every single week through our buyer's agency trying to help clients just like yourself. So if you need help moving at speed, getting it done, so you're not having to go, oh, well, I've got to go to open homes, or I'm going to do some research, call some agents while living a life, then definitely contact my team. We're one of AFR's fastest growing companies in 2023. Our team's now passing 30 full-time staff, and we're so excited because we can help more people that are listening just like yourself. So I'll leave a link in the description below, and with that, let's continue. Now let's go through the PropTrack Home Index, and I'm going to share with you what my thoughts are around what's happening to property prices right now, what's the data suggesting to us, and then I can add some more commentary around where the economy is at and why it's so important that you pay attention now before interest rates cut. The idea of interest rates cutting is not a matter of if, it's a matter of when. And when I speak to people way smarter than me, they seem to know something that most don't. So I want to share that with you as well. Let's jump into some numbers. Now, the PropTrack Home Price Index shows natural home prices lifted by 0.3% to hit a new record in May, bringing prices up 2.73% year to date. With housing supply unable to meet demand, national house prices have cycled through 17 consecutive months of growth to hit a fresh peak in May. Prices are now 6.68% above May 2023 levels and up 9.58% from their December 2022 lows. Now, if you look back at 2022 in December or even early 2023, there was a lot of fear going around in the media saying interest rates will continue moving up forever and prices are going to come crashing down, the recession is here, and all of this other garbage. Some of you may have unfortunately listened to this. Some others who have been following the channel for a while saw beyond this, understood that all of this is distractions. And yes, although interest rates went up, the warning I had at that time was that if you are in a position to buy, you probably should buy good real estate, because once your borrowing capacity has been hit because interest rates continue moving higher, as long as you have buffers, you're in the market. But if you haven't gotten in, you're probably not going to come back in for another 12 to 18 months. And that seemed to be playing out. When you look at interest rates having gone up last year, it's now a good 12 months or 18 months before you're actually able to get back in unless your income improves, which is a really scary thought, especially when you see prices being up almost 10% since the December low of 2022. Now, despite a rise in the number of homes for sale this year, strong population growth, tight rental markets, and home equity gains continue to bolster strong demand. Meanwhile, building activity remains challenged by capacity constraints and higher costs, with consequent tight housing supply pushing both prices and rents higher. This imbalance between supply and demand has offset the high interest rate environment and the impact of affordability constraints, with home prices continuing to lift. Now I'm going to tell you a story. Fortunately, in my position, I get to meet a lot of people that are quite smart, and they go out, they're experts in their field, whether it's home lending, whether it's financial planning, whether it's accountants, and I go and ask them one question, amongst other questions like, how are you? Do you eat KFC? Do you wear black t-shirts? Apart from those questions, I also ask, what are your clients doing? What are the high net worth clients doing? And what are the clients that are out there, the mum and dad investors, doing? And I'm going to summarize what they say right now. They essentially say that the people that can buy are going out and tripling down. Not doubling down, tripling down. So the high net worth clients are not necessarily going out to buy their houses in Point Piper. Rather than that, they're going in and buying and diversifying their investments. They're going out and saying, look, pretty much everything's negative at this point because interest rates are so high. So if I can pick up a good deal today, in 12 months, should interest rates decrease, they could find themselves being neutral, if not positive. Now, despite interest rates not decreasing and they stay the same, because there's such a rental imbalance and a crisis in that space, your cash flow starts improving anyway. So within 18 months, you're naturally going to be in a positive environment in most cases. Now, if you're purchasing a property that's got a rental yield of 3%, it doesn't make any sense. And that's where investors are getting smarter. And that's what I'm gathering from these smart people with their smart clients. They're suggesting that they've got so much equity in their properties, they know most people can't enter the market, so they're going out, copying a lower yield up front, knowing full well that in 6 to 12 months time, they're gonna be sitting on a really good piece of real estate whilst everyone else is trying to now jump in and fight over whatever's left over. I made a video about how bad this housing crisis is, and I only made it from last week. There's a new dashboard, so you should definitely go check it out on that one as well. But the reality is, we're so severely undersupply, and the immigration taps, although look and appear to be closing off, there still is a lot of demand and we just can't keep up. Now let's look at some house price growth for dwellings. If you look nationally, the annual growth is at about 6.68% and the median value comes in at $784,000. This would account for all dwellings, so everything from a 1-bedroom unit all the way up to a 4-bedroom house. Capital cities are up 7.22% and regional areas are up about 5.3%. Something important to note is how you calculate this, and we're going to find out in a second where the big weighings are coming from. Sydney is up 7.1%, whereas the rest of New South Wales is up 4.74%. Melbourne and Victoria overall has had a really tough time, probably at the bottom of the cycle at this point, having gone up by less than 1%, and regional Vic has gone down by about 1%. Brisbane, a clear strong performer at 13.69%. You've got the rest of Queensland at almost 10%. And then you have Adelaide and Perth, with Adelaide going at 14.49%, the rest of South Australia at 11.68%, and then of course everyone's favourite, Perth of 20.58% and regional Western Australia at 11.67%. Hobart also going through similar things to Victoria, down about almost 2%, but the rest of Tasmania is up almost 2%. That's also something to note. Now, the other thing to consider is that Sydney's median value here is coming in at 1.1 million. And when you compare that to something like Adelaide, you're at 748,000. And then you look at something like Perth, which is under 700K, is almost 30 to 40% cheaper than where Sydney's at. Now, I'm not going to say Sydney is the same as Perth because the reality is Perth's got better beaches. And I said beaches, not something else. You understand what I'm saying? Jokes aside, the reality is affordability is the key driver here. When you match up affordability within a time that we're living in right now, plus where you see the money going from the government perspective, you can see why so many people are infatuated with Perth right now. Now for us, in terms of our clients and helping them, we started buying in Perth late 2020, early 2021. And it was a struggle to go and tell clients that, hey, we know information that you probably aren't privy to. And we also have relationships with a lot of agents right now where you can get good deals. And believe me, they were good deals, especially when you look back and say, damn, I wish I bought more. Now it seems like everyone wants to go to Perth. And the reality is, although there are some really good deals there, it's still very difficult to get good value. Now, I'm not saying Perth's reached the top of the market, but what you need to understand as an investor, you need to partner up with people that can allow you to move at speed, but also diversify. Right now, it could be that, hey, Perth went really well for the last 2 years, but I need my next property somewhere else. And you want to mitigate your risk by saying, I don't want to buy at the top of the market. What happens if it stops? And all you do is focus on that one market. So align yourself with the right people, whether it's your broker, accountant, or buyer's agent, so they can help you with this sort of stuff. Now, I've been showing this graph for the better part of 4 years, and it was very interesting to see it during the lockdowns and how that all worked. But this is the home price growth, annual PropTrack home price index for capital cities in the red, and blue is for regional areas. And what I've said before is that you see greater volatility when it comes to capital cities on the downside, but you see greater volatility for the regionals on the upside. And what I mean by that is during 2019, just before lockdowns, we actually had capital city prices go down by about 7%, whereas regional prices basically leveled out and did nothing. But when it came to the house price growth that we saw during the lockdowns and all the free stimulus, along with low interest rates, we saw that the housing price growth for regional areas outperformed capital cities. Now what we're seeing is, again, the same thing play out. Where we saw the lows in 2022 and 23, we saw capital city prices go down further, but we saw regional prices sort of level out and experience little to no declines at all. Now again, this is a generalized statement. If you looked at areas like Byron Bay, they went down by 20%. But then you look at other areas of regional South Australia or regional Western Australia, those prices went up during that time. And that's why it's so important that you understand the data, you understand the trends, and you have the relationships to get the right information. Because what you see online, believe me, is not the entire story. And now what we're seeing is, although it's starting to curve down in terms of how much price growth we're having, we're still at levels that are super healthy. And when you consider that most people can't even enter this market, you've also got housing undersupply surpassing 200,000, and you can clearly see that with the home construction and underlying demand. It makes you realize that if most people aren't even here and prices are still going higher, what does it mean when everyone else comes to the party? So think of it like this. You go to a party on the weekend and you're one of the early ones. You get in and it's not really cool to be early, right? Let's be real. You go out there, but at the same time, all the drinks are available, all the food's available. So you come in and say, okay, you know what? I don't have to mingle right now. I can go and stuff my face with free food. I can get some drinks if you're into alcohol. If not, then you also have some soft drinks like Coke Zero. Coke Zero, honestly, I wish KFC did Coke Zero, not Pepsi Max, but that's a whole nother argument, a whole nother day. That's a whole nother YouTube video. But you get in early, you can do your thing. You then figure out what's the best place to sit, where you want to mingle, where you want to dance, and then people start coming through. And then as people start coming through, they want to get drunk faster, they want to eat faster, and then they want to do everything in a shorter amount of time. At that point, you're probably like, look, a fight's gonna break out or someone's gonna throw up somewhere, everything's getting dirty and messed up, I'm gonna leave and go home. That pretty much summarizes my entire investing thesis when it comes to real estate, especially in Australia. If you plan well and you have the right strategy along with all of the data and you're able to actually use the data at speed, that's how you can get in and out of markets at the right times. You buy at the bottom, you sell at the top. If you have no plans to sell, you can at least take some equity out of that property, go and position yourself somewhere else, and that way you're mitigating all risk and you don't even have transaction costs to account for. Knowing what we know and the numerous videos I've made over the last month on this channel, it's fair to say that people who've watched all those videos say, yeah, this is no surprise. I don't need to go to AFR, I don't need to go online and see all this damaging story around how the markets are gonna collapse and, oh, it takes 20 years to save for a deposit. It's all garbage at the end of the day. All distractions. What you need to focus on is your own strategy, have the right plans, and just execute at speed. I'm not saying you just go out there and just buy anything you can buy. I'm saying just have a plan. And if you feel comfortable in line with your risk appetite and you're self-aware around that, get the emergency funds in place so you can move at speed without having to think about what if something goes wrong. You have the backup plans, you move with speed and confidence. It always feels really risky and it always feels scarier. And by the time it doesn't feel risky and doesn't feel scarier is at the time that you probably don't want to buy anyway, because the opportunity at that point is completely gone. I hope you guys have enjoyed this video. If you have, smash that like button, subscribe if you haven't already, and definitely share the video to someone else that's sitting on the fence going, oh, but the property prices must be going down because the economy is screwed. Well, the reality is there's some people that know what's happening and there's others that don't. It's just a matter of who you follow and who you listen to. Thank you so much for watching, and I'll catch you guys in the next one. Thanks, guys.